We have survived the first real estate market in history where interest rates doubled from the year before. Hey, it's Robbie Bro with Robbie Bro and team at eXp Realty. We have made it through the first half of the year of 2023. Coming July, August, we're going to finally start to be comparing some apples to apples, or at least, not where we're dealing with half the difference in interest rates from today compared to years prior. So where are we and where are we heading? June 2023, we had 307 homes that sold compared to 355. That's a 13.5% decrease month over month. We're down 30% year to date. Now, we talk about this all the time. If we're going to compare to normal markets, what does that look like? 2019 was our last pre-COVID market. We're down 6.5, about 6.6%. As far as activity from last month, we're down slightly, 5.8%. A little bit of that is a lag off from school coming out. Dollar volume, we had a pretty close as far as percentage rates. 87 million compared to 108 million. That represents a 19.5% decrease. Year to date, down 29.6%. Again, none of this stuff is very surprising when we're competing out of the box interest rates. We're not necessarily jumping into the norm here. Now, when we compare that to 2019, we're up 18.5% or 18.4%. That tells us that prices are still up compared to pre-COVID. We're still well above, values are well above what they were prior to COVID. When we compare to last month, our dollar volume's down slightly, about 7.25%. So where are we heading and what can we expect moving forward? Well, first indicator is going to be how much supply or new listings are going to be coming on the market. Think about the new signs that are jumping in the yard. 344 homes last month in June compared to 469. That represents a 26.9% decrease in the amount of homes that are coming on the market. 22.2% year to date. So we have fewer and fewer homes that are coming on the market. Last month, that's a drop of 11.8%. Pending sales, that's the homes that coming off the market. That is 317 this year, 330 last year. That's a 3.9% less homes that came off the market compared to this time last year. That's down 21% year to date. Now, what's important to note, we have a decrease year to date in total number of supply by 22.2%. We're down 21% in the total homes coming off the market. So that spread is razor thin. So we are still having a lot of activity, not quite as much of it, but the inventory is basically holding steady. So there was only a 1% decrease as far as more homes coming off the market than were coming on. So why is that? We're still running into people that are very happy with their 2 and 3 and 4% mortgage rates. So some folks are sitting on the sidelines, which is why we haven't seen a massive influx of homes coming on the market. Whenever we're looking at folks that are going to be putting their homes on the market, they're going to be coming in for life needs, need more space, getting relocated, divorce, hit the lottery. You never know what any of that stuff happens when that stuff happens to pop out. So until those things start popping up or we have a more reduced rate as far as the interest rates are going to come, we may see some extra activity moving forward whenever we get those a little bit lower. So stay tuned. How is average sales price? What's going on? You would think with the total drop in sales, the total drop in pendings, the dollar volume, all that stuff. What did the sales price? Well, it actually went up again. It's up 1.2% compared to this time last year, 284,000 compared to 281. That's a 1.2% increase in the total value of the house. Average homes on market were still below 3 months supply of inventory. Basically, anything that's 6 months, 4 to 6 months is going to be, or 6 is kind of the magic line to be neutral, doesn't favor buyer or seller. 3 months is going to be favoring the seller. Anything higher than 6 months is going to be favoring the buyer. So there are some pockets and there's still some opportunities. We're really, really lacking on homes 300,000 and below. This is a really good opportunity to be able, we're still running into some potential multiple offer situations. On the upper end, we're starting to see an increase in the supply and the availability for homes that are out there. There are some opportunities. We're seeing a lot more shakeup on price points compared to what we have in months past. So if you're interested in finding out what that equity position happens to look like, feel free to reach out to me. You can catch me on my personal cell, 337-658-5690. You can shoot me an email, info@robbiebro.com, or just shoot me a direct message right here. Thanks so much, and we'll see you next month.